What's going on, everybody? Welcome to Common Sense Living, the show where we discuss financial and economic trends, business topics, gold and silver, and much, much more. So, today I want to talk about why this decade is really the decade to hold real assets, meaning gold, silver, land, real estate, anything with an intrinsic value. And you can really consider any hard asset here. I'm sure there's lots of non traditional hard assets that could be included. And for me personally, I generally like to hold things that are going to retain their value and that are liquid as well. Now, obviously, real estate doesn't fall into there, but that's something else that you could consider with real assets. Now, I believe in diversification, so I don't think it's smart to overload on any one. But let me talk about my reasons why real assets are going to see a renaissance this decade. So first is inflation, and in my opinion, it's going to be here a while. It's going to be sticky, and I think we haven't begun to see real asset prices yet. So a couple things with inflation. First, geopolitical tension. It's going to make things worse for us. Supply is going to be hurting for a lot of industries, and we can expect to see supply disruptions continue. Another important point is the strengthening of the BRICS and the real possibility of global de-dollarization. And this is actually really already happening right now. We're seeing this happen. So there's all sorts of questions this raises, like how many more countries are going to join the BRICS? Will the West, will they use the dollar? Will the East use a commodity-backed system? And this is all unfolding right now. Uh, Second reason here has to do with hyperinflation. It is a real possibility, and there's a lot of reasons for this. All the ingredients are here. We've printed so much money, and if you look historically, hyperinflation has consistently happened because of money printing, budget deficits from currency creations. So we saw this in the Weimar Republic, in Germany in the late 20s, early 30s, Brazil, the mid 80s, Argentina right now, Venezuela is also a disaster, and hyperinflation just destroys a country, destroys people. Now, opponents are going to say that this is not really possible because the dollar is not going to lose its reserve status, and it's simply the best of all the currencies. And while I agree to a certain extent, I think it's important that we remember the dollar needs to stay competitive, and that um, it really needs to be competing and keeping up. Now, the second reason that I believe we should hold assets this decade, there's a good reason to hold real assets this decade, is I believe we're going to see a decline in index fund investing. And people are beginning to catch on to this. Stock valuations, they're too high. They're way too optimistic for the future, in my opinion. Now, conventional wisdom says when you're younger, invest a higher proportion in stocks, and as you age, rebalance more to safer investments like bonds. Um, but I think that strategy is going to start changing more and more as this decade goes on. Um, we've seen in this country right now GDP growth, it's going to be stagnant due to a decline in productivity and innovation. More and more people don't want to work than ever, and we import way too many things instead of producing things and creating ourselves. So our debt's huge, both public and private, credit cards, student debt, a huge potential for increased delinquencies and defaults, and wages, they're just not keeping up with inflation. We're not pushing competition in small business lending. On top of all this, our healthcare and education system, they're horribly mismanaged, and we spend more on any other country on healthcare, and yet it doesn't seem to pay off. And there's a lot of reasons for that there, but that's another topic for another day. Now, the third reason that I believe real assets are going to be the asset to own this decade is they serve as a type of insurance and they're the most conservative asset you can own. And I think as times we continue to see more bank failures, we continue to see more trouble around the globe, you're going to see more people pile into these. Now, in the investment world, treasury bills are considered the safest asset, as the US government has never defaulted on a payment. But in the event of uh, de-dollarization, which I mentioned previously, um, a massive cyber attack or another type of disaster, real assets, they're definitely going to be better to own, in terms of having that insurance. You're going to have liquidity with gold and silver. Land has all sorts of options in terms of what you can do. Real estate, that's another one that's definitely a strong option to own, although it really kind of depends on how you're owning the real estate. If you're renting a place out, there can be a variety of problems that come up. um, so that's all I've got for today. Appreciate everyone watching. Let me know your thoughts. Please comment, like, subscribe. Thank you.